Welcome back. Once again, this video also relates to a Substack article I wrote in my free newsletter. There'll be a link to that article in the description. So if you want to read the full article and sign up to my free newsletter, then you can do that by clicking on the link in the description. So I want to talk about the world of trading in online platforms. All the people that you see, many of them have huge followings on social media, about how they operate and why we need to avoid them. If your social media feeds have been anything like mine in the past 6 to 8 months, they have been full of people predicting doom, gloom. If they're in the volatility space, they're talking about volatility spikes, and they're worried about vol going up and Volmageddon, and equities are going to crash, and all this consistently, recession, and everything's going to go horrible. It's all going to be terrible. Okay, and for the last 6 months, 8 months, 9 months, however long these people have been doing this, clearly they've been constantly wrong. And I want to talk to you about what game they're playing and why we need to avoid them. So some things about these things. The reality is that we have to understand, I said many in a video maybe last year sometime, about the idea that there are people out there that are not trading the markets, they're not playing the markets, they're playing and trading their careers. And there's a big difference. If you're trading your career, as many of the people on social media are, all you're interested in is clicks, getting attention, getting clicks. And fear is what gets you clicks. You know, whether or not they truly believe this bullshit that they're putting out, I don't know. But the reality is that the fear is what gets clicks. And if you think about it, you know, what's happened the last 6 to 8 months? Equities have grinded higher, and volatility just continually grind lower. You know, volatility, historic volatility, gone from about 30% down to 10. And have you seen anybody? I'll challenge you, go through your feed over the last 6 to 8 months. Have you found anybody out there that's put out a forecast saying, I think equities are going to grind higher and volatility is just going to grind lower? I haven't found, I don't think, any in my feed saying that. Even some of the big investment banks have been talking about, you know, massive falls in NASDAQ and it's way overpriced, all this sort of thing. And so, you know, what we have to understand is that click and fear sells, and increasingly, you know, that's what's happening in this industry. What we see out there is not robust analysis, not trading analysis by people who are traders. We're seeing people just wanting to get clicks. How can you recognize that? Well, there's a couple of things. Firstly, of course, if they're consistently and constantly just doom people, then the reality is they're probably just looking for clicks. Other things though, what is it that's going to make them wrong? So every time, if you're a trader, okay, whenever you put on a trade, you'll have something that says, okay, if it reaches this level or this thing happens, I know I'm wrong, I'm going to get out. It may be a stop loss level, it may be something else, it may be some information, but something where you always think, okay, I'm going to put this trade on, I have this target in mind potentially, but you know, I know if I'm wrong if this happens, whether it's a price target reached or some news information. You know, when you look at these people, do they ever come out and say, I think it's all doom and gloom, but if X happens, I know I'm going to be wrong and admit I'm wrong? Generally, you just don't see that kind of analysis. That tells you a couple of things. It tells you they're not a trader, because traders always have risk management in place. They always talk about what the risks of them being wrong are. And it also tells you that really they're just interested in headlines. They just want to make a big splash and just make big, bold predictions. So the things we need to look at are, you know, do they have this idea of when am I going to be wrong? Do they ever admit they're wrong? You know, all I've seen is that equities went higher and higher is for these people just saying, well, it just means the crash is getting closer and it's going to be deeper. And they've been saying this for month after month after month. And this is not new. It's happened before, but I think the world of social media means it happens a lot more. And of course, the reality is if you're playing the game of trading your career, then if you can build 50,000, 100,000, 200,000 plus followers on social media, then that in itself is going to bring you opportunities for revenue streams, irrespective of whether what you're saying is good, valid, true or not. Of course, eventually, at some point, there will be a market correction. Volatility will spike. But, you know, even a broken clock is right twice a day. And these people will claim they're right. But I would imagine that many of their followers have probably gone broke before it's got there. And I actually do know people over the years who have followed some of the sort of, I suppose, the early birds into this doom and gloom kind of clickbait idea. And I know people that have lost significant amount of money following people doing this. And by the time the eventual sort of market correction happened, they had no money left to trade it. Daniel Kahneman in his book Noise makes a very good point about forecasters and predictions, and the book is really about how people are such poor predictors. I think in this case of the financial markets, some of these people are not even trying. They're not trying to trade the markets. They're just trading their careers. They just want to get headlines and clickbait. But even those that are just bad at it, as Kahneman says, that one of the things that they forget is the idea of base rates. And base rates is whenever you're making a prediction, you have to ask yourself, what's the most likely outcome? What's the most observed outcome for this particular forecast that I'm making? So if you look at equities, possibly one of the most likely scenarios for equities is that they go higher, and if they go higher, generally it's on slightly lower volatility. So if you're going to continually make forecasts of crashes, how often does the market crash? If you're even making a forecast of a correction of 10, 15, 20%, how often does that happen? And bearing in mind, we did have a market correction last year of quite a large magnitude. So how often does it happen 2 years in a row or 2 out of 3 years? Ask yourself that. And the base rate is that most of the time equities will grind higher, or a lot of the time they will grind higher in lower vol. So again, ask yourself, does this fit with what's really happening? And again, this is why people are such poor forecasters. But like I say, I think some of these people are not even trying to forecast the markets correctly. It's just clickbait. And you have to really understand this, start to unfollow them, because it can affect you. Even, any trader can be affected if they continually see people saying doom, gloom. You're going to spend a little bit of money here on put or whatever and be wasting money sometimes. Sure, equities are overvalued by some metrics right now. You have to be careful, be careful what you're paying. But by the same token, continually saying doom and gloom, equities are going to crash, and just keep saying that every month, and then, eventually it will happen. That's not analysis. It's not robust. And like I say, one of the key things to look for, and if you follow these people, ask them, what is it that will prove that you're wrong? What are you saying? What is it? What will happen, whether it's the market moving above a certain point or whether it's new information? What is it that will suggest to you that you're wrong and that you'll change your forecast? If they just say, no, it's definitely going to happen, nothing will change my mind, number one, they're not a trader. Number two, they're just looking for clickbait. So again, read more in the article. I've put some graphs up as well in the article if you're interested in that as well. And I'm going to talk a little bit more about this topic of the people in social media going forward as well. So thanks again for watching, and don't forget to subscribe.